So the Federal Reserve just cut interest rates again by 0.25%, which is the third time this year that they have cut the federal funds rate. They did this in September and October. And this is what we call a gradual, slow easing trend. It's not a big emergency slash of rates, which honestly isn't great for the economy. But here's where it gets interesting. The vote inside the Fed was split. One member wanted a bigger 0.5% cut, and two members didn't want any cut at all. So they kind of met in the middle with a 0.25 point cut. And this is the biggest disagreement that we've seen inside the Fed in years. So what does this mean for you and mortgage rates? First, let me reiterate that mortgage rates don't move in a straight line with the federal funds rate. They follow what investors expect for inflation in the broader economy, not just what the Fed does at one singular meeting. Because this cut was widely expected, a lot of it was already priced into the bond market, and that just means that mortgage rates may not drop overnight just because the Fed moved by 0.25 point. 0.25 point in the federal funds rate does not equate to 0.25 point in mortgage rates. In fact, sometimes mortgage rates stay the same, and sometimes mortgage rates tick up just a bit. And the reason for that is we have to see how the markets react to the Fed's comments, not just the headlines. So second, the outlook the Fed gave for 2026 also matters. Right now, they're only projecting one more small cut next year, and some members are still arguing for no more cuts or even a possible hike. That tells you the Fed's not convinced that inflation is fully tamed. But all of this can change too, because Fed Chair Jerome Powell is coming off in May. We don't know who's taking his place or what their stance is going to be, but we'll just have to wait and see. So all of this just means that you'll likely see windows of opportunity where rates dip and then they bounce rather than one small decline. Think of it like a yo-yo. Like, I'm sure you probably played with a yo-yo when you were a kid. You would drop the yo-yo and then you pull it back up, drop, up, drop. That's kind of what mortgage rates have been doing this year. You see them go up and then they come back down. Not big amounts, but you'll see them go up and go down. Hope this is helpful. Reach out if you have any more questions.